And I'm with apexinvesting.com. We do these webinars each and every Monday night at 7 p.m. We do these informational and educational webinars for Nadex. Apex and Nadex, two complete separate different companies. We're not owned by each other. We're completely separate. Nadex is an exchange. Apex, we're an online community of traders helping traders. We're an education company. I'll tell you just a little more about us. Tonight what we're going to talk about is how to trade news events with Nadex spreads. I'll touch very briefly on binaries. I'll show you where you can get some more information on that, but we're going to cover trading news with binaries on a different webinar. So tonight, I'll point you to some educational videos on it, but tonight is strictly just about Nadex spreads and how to trade them with news events. And we're not going to spend much time on, I'm going to kind of approach this as that you've been with us over the last few weeks of webinars, that you have a good understanding of what Nadex spreads are and how they work. So we're not going to cover the basics tonight. For any of you guys that may be on with us that are new, I will show you here in a minute where you can go back and watch some of the last few webinars and catch up on those, and where you can catch up on some information about kind of the basics of spreads. So just wanted to keep that in mind for you. Some weeks we cover a little both. Some weeks we go back and cover some of the elementary basics. But tonight we're kind of going on what we've built on, and I'm going to be jumping into this as in, expecting that you guys have a good understanding of what spreads are and how they work. Okay, so just want to let you know that. I'm going to talk to you about how to trade news. I'm going to talk about two different types of strategies that we do with Nadex spreads. One strategy is going directionally, looking for larger moves, and the other strategy is, sometimes these news events will come out and, they'll have a little bit of move on the market, but not a whole lot, or they'll make the market kind of pop up and then retrace back down. And, in the end of it, the market didn't really move a whole lot, kind of settles back right where it was. How can we take advantage of that and potentially profit from that? So that's what we're going to talk about tonight. So let's just kind of jump in here. Let me knock out our disclosures. Trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Information here in this webinar is for informational and educational purposes only, and not an offer or solicitation of an offer to buy or sell any particular financial instrument offered by Nadex. And past performance not indicative of future results. Again, if you're brand new on here, I'll show you here in a minute where you can catch up, but make sure to hop on over to nadex.com. You can go through some of the tabs there on Nadex. You can also get you a $25,000 free demo account to be able to use to start practicing trading Nadex binaries and spreads, get familiar with the platform, get familiar with placing orders and exiting orders. You'll see that on some of the basic training videos I'll refer you to here in just a moment. Once you've done that, real important here, I'm going to spend a little time with this because I want to show you several free tools. Kind of tonight's webinar is going to really center around a couple of free tools that you'll have access to. Hop on over to our website, hop on over to apexinvesting.com. You can go right here to join free now. You can select a free username and password, absolutely free, no credit card, none of that, just select a username and password. It will give you full access to all the basic education, training courses, and free tools here on the Apex website. Once you've created that username and password, you can log right in and get to our home page here. Okay, so let's do a couple things here. First of all, if you are brand new and you're not really familiar with ins and outs of Nadex spreads or Nadex binaries, I'm going to give you right here a few places you want to go to. All right, so hop on over to apexinvesting.com, get your free username and password. Once you have that, you can go right here to Start Elite Education. And under this tab, if you're familiar with, or if you're interested in trading Nadex spreads, you can go right here, or binaries right here. And literally everything you need is right there. Tonight we're talking about Nadex spreads. So again, if you're brand new, you can go right here. This talks about getting started, opening up an account with Nadex, but then right here, Nadex Spreads 101. This is a step-by-step training course you can go through absolutely free. It'll walk you through some live trades, walk you through what are spreads, how does the risk and reward work, what's proximity, what is premium, some advanced training, Once you go through this complete course here, this is not one big long webinar. This is a broken down step-by-step course covering each different section you might need to know and each different thing you might need to know about Nadex spreads. Okay, so you can go through there, get familiar with Nadex spreads, go through and get some information about some different systems we use to trade Nadex spreads. One of the advanced systems we're talking about tonight is right here under spread trading systems. You can go down here to advanced and iron condors. Okay, one of the things we're going to talk about tonight is iron condors, and we're also going to be talking about straddles. All right, so there's a little bit more information right there about the two we're going to cover tonight. We're going to just kind of touch on them briefly tonight, just to give you a basic general idea of what they are and how they work. If you really want to, if you like one of the strategies you see tonight, you really want to dig in and learn a little more, understand a little more, look at it from all angles, understand some of the step-by-steps, it's literally right there for you. Okay, so again, Elite Education, spreads. For you newbies, you can check out Spreads 101, get familiar with them. Right here, several different ways we trade spreads, but then right here under Advanced Systems, we've got iron condors, which we'll cover tonight, and straddles, which we'll cover tonight. Okay. This webinar, yes, this webinar is being recorded. Want to show you where that will be. It's right here under this tab, Help Desk and Forum. If you go right here to the Trading Questions Forum, another place you can get a ton of free education and information. You'll definitely want to check it out. The forum is divided into several different sections. We've got some articles. We've got section 1, section 2. Everything from trading mentality and psychology, risk management. If you scroll down here to section 10, again, all of our different step-by-step training courses. You can watch the step-by-step videos, screenshots, written out rules, discussion back and forth between other traders. Get an idea of what other traders, we have over 16,000 members here at Apex. Get an idea of what other traders are doing, how are they trading, what kind of success do they have, bounce questions back and forth. A great place to socialize with other traders, and instead of being out there kind of in the dark on your own. Scroll down a little further, you'll see Watch Webinars here. This is a whole library, a whole wealth of information. As you can see here, we've got a section for Nadex binary webinars, Nadex spread webinars, getting started with Nadex. Tons of good information in there for you. But right here under the newest webinar section, later tonight after this webinar, give me about an hour and I will have this webinar recording uploaded, and I'll put it right here into newest webinars. Also, if you're kind of new joining us here and you want to catch up on some of the last few weeks of webinars, you can go right here and watch whatever you like. You can see last week's webinar, how to start day trading, Monday Nadex webinar before that, picking the right spread, directional trading with spreads, in the money and out of the money binaries, trading binaries part-time and at night, all kind of good information there for you. Very easy to catch up on anything you might have missed. And again, I showed you where you can find the step-by-step training courses about spreads and how they work. You can also go right here under Watch Webinars here, go to Nadex Spread Webinars, a complete library of spread webinars. Picking the right one, directional trading, misconceptions, the basics of spreads, scalping strategies, the ins and outs of spreads. You can really dig in, just a ton of information there for you. Okay. Like I said, right here under our weekly webinar calendar, we do these webinars for Nadex every single Monday night, talking about binaries and spreads, different ways to trade them, different ways to take advantage of the capped risk of Nadex products. So feel free to join us on any of those webinars. And then here in a moment, I'm going to show you where you can get some free tools that you can use for your trading and for some stuff that we're going to talk about tonight. Also, hop on over to facebook.com/apexinvesting. Like us and follow us on Facebook. A great place to keep up to date with anything new going on, any new strategies or systems, new webinars, new articles, news events. Once you've liked us on Facebook, click the liked button and make sure to hit right here all posts. That way you get notified of everything and you don't miss out. So, all right, so tonight let's jump in. We're going to talk about how to be aware of upcoming news, how to plan ahead for news trades, learn how news can affect the market, and how to utilize Nadex spread for news trades. So what are news trades? Well, news trades can be Many different things. Many different things can affect the markets. If you're trading stock indices, there can be news coming out that has to do with earnings reports or buyouts or takeovers or any kind of news events there. But the ones you know about ahead of time, way ahead of time, are normally like the earnings reports. All right, and earnings reports, whether it's Google earnings or IBM earnings or whatever company it may be, whatever stock index that company is a part of, some of these larger company earnings reports can have a big impact on that stock's price. And depending on how big that company is or how big of a move that stock makes, it can have a big impact on the overall move of the indice. All right. Every single week you have, on Wednesdays, we have the weekly oil inventory report. That report can be over or under expectations. There can be a surplus of oil supply. There can be a slowdown of production. That report can really have an effect on the oil market, which can also have an effect on, some of the Forex markets and the US dollar, which can, in return, if there's a big move in the US dollar, can have an effect on some of the indices as well. Every Thursday is the weekly natural gas natural gas inventory report. Can have an effect there. You hear all the time about, these FOMC meetings or Fed funds rate, or, somebody from the Fed is talking, or overseas, Bernanke's talking, or somebody's talking that, might affect interest rates or them printing money, or, putting money into the system that can have an effect on that country's currency, which therefore can affect other currencies. And some of these news events are planned out, and you can know ahead of time when these meetings are or these announcements are. And some news has a big, huge, major impact on the market and can move things like crazy. You might have some, European economic news release come out that historically can move the euro or move the pound, hundreds of pips. And you have these huge, massive moves. Or sometimes it's like, well, hey, this is a news event that's coming out. This is an announcement. You need to be aware of it because it can have an effect on the market right as it's coming out or right after it comes out. It can make the market pop 15, 20, 30 pips. But, that's about it. That's historically about all it moves. Or maybe it'll pop up 30 pips and then it'll come back down 15 or 20, kind of retrace. So in the end, didn't really move it a whole lot. And sometimes you never know, all right? You never know. I mean, you can look historically and say, okay, historically this has a big move or a little move. But sometimes some of these events or announcements coming out, you don't know. Is it going to be a positive or negative report? Is it going to be over or under? What is Google earnings going to come out as? Are they going to be profitable for the quarter? Are they going to lose for the quarter? Did they come out with some big new, did Apple come out with some big new, iPad or phone release that, is going to, as soon as that release comes out, makes their stock pop up because everybody expects big new sales, but at the end of the quarter, how do they do, how they didn't do? You just never know sometimes, okay? But it's very, very hard to determine direction ahead of time. That's one of the kind of double-edged swords of news trading, because everybody says, hey, I can sit in front of a computer 8 hours a day and trade and hope to get a trade and hope that the market moves, or I only like to trade when there's news events. I only like to trade when I know something's coming out that will make the market move. So why not be, really focused and diligent with my time and only trade, or mostly only trade, around those news release times. That way I've got a little more, guarantee of a move in the market. And that makes sense, especially if you're a part-time trader. Hey, I can only trade a couple nights a week. What nights do I want to trade? Well, I'd like to trade on nights where I know there's something coming out in the market's going to possibly move. That makes a lot of sense. But the hard part about it is people try to trade news events ahead of time, meaning they want to determine direction ahead of time. So, hey, I think, or I have a gut feeling that when this European economic, release comes out, that they're going to raise rates, or they're going to lower rates, or whatever that might be. So I think that's what's going to happen when the news event comes out, but I won't actually know till it does, so I'm not sure how to trade it. I'm not sure how do I trade that directionally? How do I know which way it's going to go? Well, I was, watching TV and listening to CNN, and everybody there saying that they think that the, report will be positive and therefore the market's going to go up, or they think it's going to be, and you know what? Half the time they're right, half the time they're wrong. You never know. It's such a shot in the dark, 50-50, of being able to know ahead of time what direction it's going to go. So if it's hard to know, if it's hard to trade news directionally ahead of time, how do you take advantage of it then? Do you wait for it to move? All right, I'll wait for the report to come out. I'll wait for it to go up or down, then I'll get in. So if the report comes out, the market starts flying up, then I'll get in and buy. Well, sometimes you might do okay with that. But how many times have you done that? Wait for the news to come out, the market starts shooting up, I jump in, but I jumped in after it already moved up like 20, 25 pips, and it felt like as soon as I got in, went up a few more pips, and then it came back against me. Like I got in too late. Like if I wait to see which way it goes, I seem to always get in late, and I don't get much of the move, and you're just frustrated. You don't know what to do. Well, I'm going to kind of show you here how we trade news here at Apex Investing and how we use some of the capped limited risk products of Nadex. So if you're on the Apex Investing website here, you can go right here to Access Free Tools. You go right here to News. You'll see News Trading Plan. Okay, and we keep this updated for each week and the week ahead. And basically, this is a very, very helpful tool. Now, this is not every single news event or announcement out there. There's plenty more, there's tons more, tons of little meetings and appearances and speeches. These are the main news releases for the week that we feel our members need to be aware of. Okay, these are the ones that historically, do have an impact on the market. So for example, sometimes you'll see on these news events, it'll say, okay, well, this is coming out, but be aware. And for example, if you click on one of these, it'll open up. All right, and it'll say this is the Euro-German preliminary CPI, be aware. Be aware of the, Euro-German preliminary CPI on Wednesday, 3/3. Okay, well, what does that mean? Well, you'll see on here quite often there's ones that say, be aware. What that means is, hey, be aware, this news event or announcement's coming out. It does not historically have a huge move on the market historically, but it can move it a little bit. So why is that important? John, you might ask, well, why do you put that on the calendar if it's not really a bigger move? Well, let's say that you're trading a Nadex binary, right? And you know that at expiration, the difference between winning or losing on that binary comes down to one tick, even 1/10 of a tick. So even if this news report coming out may only normally move the market 5 or 10 ticks, well, if you're holding on to a binary for an hour and a half and you're getting close to expiration at 3 a.m. or at 9 p.m., and that's right about when this news event's coming out, and the market, hey, looking at it from a news trading aspect, 5 or 10 ticks, not a big deal. But when you're in a binary trade, that's a big deal, because your binary that's 5 ticks in the money can all of a sudden, boom, in an instant, not be in the money right at expiration, right? So you want to be aware of these things. So if you're in a binary trade, for example, and you're coming up to a news event and you're profitable in that binary, you may decide to go ahead and move your stops a little closer. You may decide to get out of that binary now, take what profit you got, just in case it goes against you. So you want to be aware that there might be something coming up that can have a slight little pop in the market. May not necessarily be tradable separately in and of itself, but you want to know that for your current positions. All right, and you'll also see then that there's also times where we have, like right here, it says Iron Condor next to this trade. Well, what does that mean? Well, let's click that. All right, this event here is the non-farm employment change at 8:15. All right. So that change news is being released at 8:15 a.m. on Wednesday, 3/30/16. We're looking to find an iron condor on the euro dollar, which is on Nadex, entering as early as 7 a.m. with an expiration of 9 a.m. for a minimum profit of $30. Okay, that's how we plan on trading this news event. All right, because this is not just a be aware. This is okay. Hey, historically, this does have a history of moving the market the way that we are planning ahead to trade. We know this is coming out. We know the day and time this is coming out. So the way that we're planning on trading ourselves is we want to do what's called an iron condor with Nadex spreads. And I'll show you what those are here in just a few moments. And we're looking to find a Nadex spread on the euro dollar. We can enter it as early as 7 a.m. in the morning. And we're looking for an expiration of 9 a.m. And as we know, Nadex spreads come out every hour on the euro dollar, and they last for 2 hours. So we can get in right at 7 a.m. or we can get in a little after, because the news coming out at 8:15. We don't want to get in after that, right? We want to get in between 7 a.m. and 8:15 as early as we can when the price lines up properly. And we're looking for a 9 a.m. expiration. We want a minimum profit potential of $30 per iron condor. I can do 1 iron condor, I can do 5, I can do 10, whatever. Okay? So I'll show you a little more there what iron condors are about here in a moment. For example, right here on Thursday, what do we have here? We have the pound manufacturing PMI coming out at 4:30 a.m. Okay? And we're looking to find a straddle. This is different from iron condor. We're looking to find a straddle on a Nadex spread on the pound dollar, entering as early as 11 p.m. in the evening with an expiration of 7 a.m. for a maximum risk of 40. Okay, and I'll explain to you here in a minute what a straddle is. Okay, both of these we're doing, straddles and iron condors are done with Nadex spreads. So this is a great free tool to be aware of. Okay, for several reasons. Lets you know what are the major news events you need to know that are coming up this week. And anytime you're trading, whether you're trading full-time, part-time, daytime, nighttime, whatever it may be, hey, I need to be aware of what's coming out today. Have you ever been trading and you hop on, you're watching your chart, you're placing a few trades, not lots going on, boom, market just shot like 50 ticks in like 10 seconds. And you're like, what in the world just happened? Where did that come from? And it blindsides you, right? And you're like, what just happened? Did everybody just suddenly wake up? Everybody just, what happened? Well, most of the time, one of these things right here happened. Most of the time, when the market moves so crazy fast like that, it's not just because people woke up and had their coffee and said, let's just start buying a lot right now and move the market real quick. That can happen, but most of the time it's, hey, something came out. Somebody said something, some kind of policy meeting, some kind of announcement came out, and boom. As soon as they said it live on TV, all the big boys started either buying or selling. They moved the market quick. I'm sure we've all had that happen, right? Just boom, what just happened? A lot of times you would know ahead of time that that could be coming if you were paying attention to news. And you might know, hey, whatever position I'm in, I want to get out of it now. Or I want to lock up my stops, whatever it would be. That way you're not blindsided by it. Like I mentioned earlier, let's say, for example, that you have a full-time job. You work 8 to 5, but you are starting to get into this trading thing. Hey, I want to start trading. You know, I've come across trading. I want to trade Nadex, and I can trade at night, but I can only trade 2 or 3 nights a week. You know, I can't trade every day, every night. I have a family. I have kids. I can't be away from them every night. So I want to trade a couple, 2, 3 nights a week. Well, and then you find yourself sitting, you know, getting off work, picking up the kids, doing dinner, do what you got to do. You're rushing to get in front of your computer. You're setting up your charts, and you're sitting there watching, and nothing happens that night. Like nothing is moving. And you feel like, ugh, okay, I'll try again tomorrow or Thursday. You sit down again, and nothing happens. And you feel like you're not getting anywhere trading part-time just a couple of nights a week. Well, let's take a look at something here. if you're going to sit down to trade at night and you only got a couple hours at night and you only got a couple days a week to do it, would you want to look ahead at your week and say, okay, what night should I choose? Should I choose, for example, Tuesday night? Well, what do we have on Tuesday here in the evening? Nothing. Like 4 or 5 p.m., there's a weekly weather and crop bulletin report. That'll affect some of the corn and soybean, some of the commodities market, but nothing that necessarily on the schedule to really move like the Forex markets in the evening, right? Okay, well, what about tonight? Well, from 7:30 to 8, 7:50 to 8:50, we've got the JPY, the Japanese household spending and unemployment rates. We've got the JPY retail sales and preliminary industrial. Okay, those might, they're a be aware, so it's not a huge move of the market, but it might get some action. So if I had to choose between Monday night and Tuesday night, maybe I'd say, let me trade Monday night because there is something coming out, right? Or then I'm looking at Wednesday night. Okay, well, what do we have? Well, we've got, some New Zealand stuff. We've got some pound stuff. It's just a great way to help you, and you can even look back a week as well. You can go back. It's just a great way to help you be able to choose, especially if you're part-time, hey, if I've got limited time, where do I want to focus this time? So it's a great free tool there for you to use, all right? Not only showing you what's coming up, the times, but even showing you how we plan on trading it as well, and how we plan on taking advantage of those Nadex spreads. So it's a great free tool there for you, okay? Now, I want to talk to you real quick about another free tool. I'm going to pull over here let's talk about some Nadex spreads real quick. So I'm going to pull over the Nadex platform, Nadex demo platform here. And again, if you go back and if you've been with us before or you catch up on some of the webinars, when it comes to Nadex spreads, let's just say, for example, tonight, I'm going to pull up the euro dollar. Say I'm trading tonight, or you know what, let's just say, what was it we looked at on the news calendar a minute ago? JPY, right? Some Japanese news coming out. So say I wanted to trade the dollar yen, and I want to trade some Nadex spreads tonight. Well, what do I have here available to me? I've got some spreads that open up at 6 p.m. and they go till 11 p.m. If I click that, I've got 3 different spreads to choose from, right? 113.40 to 114.90, 1265 to 1450, 90 to, okay, I got 3 different floors, 3 different ceilings, got 3 different spreads to choose from 6 to 11. I've also got spreads that go from 6 p.m. to 8 p.m. Okay, those are 100 points wide. I can click those, and I've got, again, 3 more spreads with floors and ceilings, different floors and ceilings. I've got 7 to 9 p.m., 3 more spreads with complete different floor and ceilings, and they're priced differently, right? I can buy this one for this one for this one for this, sell this one. That's different from the prices on these. Then I've also got dailies. And by the way, if you look in your live Nadex account as of today, Nadex did add in the extra spreads on the daily Forex and on the daily indices as well. Okay, so a lot more options on spreads. When you go to the daily spreads, you've now got 4 different options there, all with different floors and ceilings, all at different pricing. Okay, so when you're looking to trade spreads, you're like, okay, well, and if you look at a week or 2 ago, I think it was 2 weeks ago, we talked about picking the right spread and how, the different spread pricing works and all that. Well, if I want to trade spreads, I've got so many different options here. I've got different time frames, different expirations, different floor and ceilings, different size of spread, different prices. So, okay, so let me click this one. What are my options? Okay, I got all these different prices. And let's just say, for example, I want to buy this spread. So I have to click it, say buy one. Okay, then it'll pop up and show me I've got $9 max loss, $141 max profit. Okay, cool. What about on this one? If I want to buy this one, I click it. All right, that one I got to put up a little more money, $145. Max profit of 5. Okay, I don't like that. Now let me go over here to these 9 o'clock ones. I've got all different ones again. And if I want to buy this one, I select buy one. Okay, that one I got to put up 52 to 40. All right, then let me go over here. You don't remember what's going on, right? You've got too many options, too many different things to remember. Which one's priced the best? Which one's priced the closest? How much you got to put up? You're going back and forth. It can be very, very overwhelming and confusing. So if we hop back over to apexinvesting.com, this is a totally free tool that you can use. Right here under Access Free Tools, go right here to Scanners. Okay, and you can access the binary scanner and the spread scanner. Okay, you do have to sign up for them, but they're free to use. You just have to activate it, not sign up. And all you got to do is sign in with your username. Okay, go right here to Spreads, and you'll have some messages that'll pop up. You can just read through those messages and then X out of those. Okay, and so what was it we were looking at? We were looking at the euro dollar, right? So we'll select euro dollar. Okay, look at what I have here all on one page. Okay, I have the euro dollar spreads. Here's the spread. Here's the floor and ceiling. Floor, ceiling, floor, ceiling. All these are the spreads. These right here are the ones that expire at 8 p.m. These three. These three right here expire at 9. These expire at 11. These are the big ones that expire tomorrow. I see them all on one page. Okay, right here, this is the offer. This is the price I can buy them for, just like shown on the Nadex website. This is the price I can sell them for, just like on the website. So I don't have to go back and forth between all those different tabs trying to remember what spreads are available and what they were priced at, or what was the different floor or ceiling. I can see them all in one place right here. Okay, and oh, you're right, Craig, thank you. We weren't looking at the euro dollar. We were looking at dollar yen. Good call, Craig. Sorry about that. Perfect, thank you. There we go. So I see them all right there in one place. Okay, so we had to go back and forth on the Nadex website. I can see it all in one place, what they are, when they expire, the price I can buy or sell it for. And then check this out over here. See this green and red? Remember over here on the Nadex website where we had to go, okay, well, this spread is from 1090 to 1340. I can sell it for this, buy it for this. Well, what's my risk? So if I buy it, I got to put up 228, and my profit potential is 22. I don't like that. So what if I buy this one? What do I have to put up? Okay, 258, you don't have to do all that. It's right here. What do you think this green and red is? For each one of these spreads, red, negative 84, that is the potential risk and the amount you have to put up. Potential profit is the green, plus 66. Right here, negative 258, that's the risk amount I have to put up. That's my profit potential. I don't have to click over and over back and forth. I can see all of my options, everything all at one time. Okay, and that's a free tool that you can use. All right, we also have a binary scanner as well. But this scanner makes trading spreads so much easier because you can see all of your options very quickly, very easily, all at once. Okay, now let's pop back over here real quick. Now let's look at, for example, these spreads right here that go from 7 p.m. until 9 p.m. And let's look at the floor and ceilings, all right? And we've talked about this before, how the floor and ceilings are made. But when it comes to these spreads that come out every 2 hours, you've got 3 spreads that come out. Notice the bottom one here. The spread is, okay, actually now I am going to switch over to the euro dollar just because I'll show you why here in a minute. So you got 3 spreads that come out. See this one here? The ceiling is 1.1200. That means that's the top of the spread. And it goes down 100 pips to 1.1100. And then this spread up here has a floor or bottom of 1.1200, which is the same as this top, and it goes up to 1.3 300. Okay? And then you've got a spread in the middle. So notice the top of this spread is the same number as the bottom of this spread, which is 1.1200. So what we're going to do here is, I'm going to pull up a euro-dollar chart right here. Okay? So what we have is we have a spread that is 1.1200 going down 100 pips, right? And then we have another spread that is 1.1200 going up 100 pips. All right, does that make sense? You've got one spread that's going down, and you've got one spread that's going up. But what they share in common is that number of 1.1200. So on this spread here, 1.1200 is the top of the spread, and it goes down 100 pips. So on a spread, if we were to sell this spread right here, saying the market's going down, if we're wrong and the market goes up, do we lose money past 1.1200? Can we lose money if the market goes up past 1.1200? Or is 1.1200 our top, our ceiling, where our risk is stopped and capped? Right, Leonard, yeah, we can't lose money going up above that, right? Because that's where our risk is capped. Now, what about on this spread up here that goes from 1.1200 up to 1.1300? If we bought this spread, saying the market's going up, but we're wrong and the market goes down, do we lose money below this bottom floor of this spread? No, right? We're capped there, okay? So I want you to pay special attention to that here for a minute. So we talked about already, it's hard to know the direction ahead of time where this news will take a market. Like I said, expectations are normally wrong. What you see on TV and hear these commentators talking about, they're almost always wrong. And it's hard to enter directionally after the news comes out because sometimes it can move so fast. Okay, so how can we trade it? What if it's a news event where there's a big move expected? Like, hey, historically, when this news event comes out, it moves the market like 100 pips. Like, it moves big. But you just never know which way it's going to go. How can you take advantage of it? If you know there's going to be a big move, you just don't know if it's going to be a move up or down, is there a way that you can go both ways? That you can buy and sell at the same time to potentially profit whichever way it goes? So, let's take a look at something here. Let's just say, for example, okay, let's just say, for example, that, because right now we're looking at the euro dollar. Let's just say, for example, that there was a big news event coming out on the euro dollar. Okay? We don't know which way it's going to go. Is it going to go up 100 pips or down 100 pips? Well, what can we do to get on both sides of it ahead of time, before the news event even comes out, and potentially profit? Yep, Leonard, you said it. This is what's called a straddle. So what we're doing is we're straddling the market. Like if you think of straddling a horse, you got a leg on each side, or straddling the fence, you're kind of right in the middle either way. This is what's called a straddle. Okay, let's take a look. So this spread here, okay, the bottom, let me see if I can get this on one screen for you here. All right, so this spread right here, the bottom or the floor is what? 1.1200 going up to 1.1300. That's this top spread, right? The bottom's 1200, goes up to 1300. So if we click this, we say, hey, in case the market's going to go up, I want to buy it. All right, what is our risk there? We're risking $6 to potentially make $94 if it goes up. So my risk up top here is $6 for this spread right here, right? So if I bought this spread, my max risk is $6. Okay? Now, what about this spread down here, where the top of the spread is 1.1200 going down 100 points? Well, if I want to sell this spread, my risk is $6 for a max profit of $94. So basically, to put on this trade right now, this is just an example, I'd have to put up $6 here and $6 here. So let's just say there's a news event coming out that's going to have an effect on the market. Now, when there's a big news event coming out, there's normally a little more premium built into here. Instead of $6, maybe you got to put up 10, let's just say. But for right now, if I knew there was a news event coming out, going to have a big move on the market, I just don't know if it's going to be a move up or a move down. Well, what I can do is I can find that spread that's right about where the market is right now, okay? And I can choose to buy this one that's where the market's right close to the floor and sell this one that's right close to the ceiling, and I've got $6 risk on each side. Leonard, I already had a euro dollar chart open. That's why I switched over to it, so I didn't have to go through and have y'all wait while I was opening more charts. So no particular reason I did euro dollar, I happen to have one open. So does that make sense to everybody, what I did there? That's what's called a straddle, where you're getting in on both sides. So I got in on both sides, very, very low risk. I got $6 risk on each side. So let's say that the news event comes out, and let's say that the market shoots up, right? Let's say the market shoots up. Why is this not working for me? Okay, and it goes up 80 pips. Okay, so obviously here on this particular trade, I would not be making any money on this spread that I sold to go down, right? I would just lose that $6 there that I had done to go short, correct? I would be making my money on the long side, the bought side, when the market went up, okay? Fernando, we'll get to that. We're talking about straddles right now. We'll get to iron condors in just a little bit, okay? So does that make sense of how I did that? So if there's a big news event coming out that's going to move the market, I just don't know which way it's going to move it. And I don't want to get in early going one way and I'm wrong. I don't want to get in after the news comes out and catch it too late. How can I get in ahead of time before the news and be on both sides of it? So that way, whatever side it goes a big move on, I can take advantage of it. But have very, very limited risk and very, very little, very small margin, okay? No, they're not. There's no OCO order here. You've got $6 risk over here. You don't really need to worry about closing that out when the market goes up. Because as soon as the market's moved, you're not going to have anybody on the other side to get out of that one. Because you only had to put up $6 on it anyway. It's kind of worthless at that point. You know what I mean? So you're not looking to, as soon as it moves one way, close the other one out real quick. You've got $6 tied up in it, okay? Because also what can happen, let's say this market shoots up 60, 70 ticks and you close it out and take your money. And you're like, hey, I'm happy. But then you still got an hour and a half for the market to come back down and maybe retrace, and maybe you can make some on that side. So no, you don't need to close the other side out. But that's what we call a straddle. So what we're looking for is to straddle the market. Wherever the market is, get those close to the floor and ceiling spreads with a little bit of risk, getting on both sides of it. Okay? Now, first of all, does that make sense to everybody? Let me start there. All right, there's a couple other questions. We'll get to those. All right, but does anybody have any questions on how that works just in and of itself? Okay, so everybody understands that. Okay. Yeah, Chris, is pretty much the same thing. Yep, like with regular option trading. Let's see here. Yeah, Abdul, like on the news plan, when it says, hey, do a straddle with a maximum risk of 40, that means 20 on each side, or whatever on each side, but with a maximum total risk of 40. Okay. Tony, why did you sell the lower one? Because we don't know ahead of time which way the market's going to go. Is it going to go, the market is right here right now. Is the market going to go down? Well, I don't know. So I sold the lower one in case it goes down. Is the market going to go up? I don't know. So I bought the upper one in case it goes up. Buying one and selling one. Okay. So it all depends on when the news is coming out. All right. The closer you can get to news, sometimes the higher the premiums get, the more you'll pay for them. Some of you are asking, hey, well, when do I place them? Well, we always put that right there on that news trading plan, showing when we plan on placing them. It just all depends on when that news event is coming out. Okay. Let's see here. Fernando, if the market's not near the center of the two spreads, do you just not take it, or do you wait for it to reach the center? Well, a couple things there. For one, is it doesn't always have to be right there. I mean, let's just say the market was up here a little more. Well, as long as the risk between buying this one and selling this one was still in line with what, you know, I have on my plan, on the news trading plan, I would still take it. But the other thing we know is we know ahead of time what time the news event's coming out, right? So let's say that right now it's 7:47 Eastern time. Let's just say, for example, the market was up here. So it wasn't right there. What do we know is going to happen at 8 o'clock here in 13 minutes? What do we know is going to happen on Nadex in 13 minutes? Okay, because people say that a lot. Well, what if you got a little bit of time to go and there's not one that's just right there? 6 to 8, 7 to 9. What's going to happen at 8? 8 to 10. And when those new ones come out at 8 o'clock, the 8 to 10s, what is that based on? What are these floor and ceilings based on? It's based on where the market is at 8 o'clock. So at 8 o'clock, you're going to have a brand new set of spreads that have a new floor and ceiling that's right at where the market and the indicative is. Okay, does that make sense? Okay. Let's see here. Now, what happens though? Okay, what happens if the market just stays right where it is until 9 o'clock when these expire? Like maybe it goes down 2 or 3, then it comes up 2 or 3, and down to, like right here, down a couple, up a couple, down a couple, up a couple. It pretty much expires right about where it is. Do I make anything, or do I pretty much lose $6 on each side? I would lose, right? Because I'm only going to make money on this strategy. Because I already hear you saying it, thinking it, and you're already starting to ask it. Well, why can't I just do this on every trade and win every trade all the time? I'll just do this on everything all the time. Well, that's the perfect, to do this on every trade all the time is a perfect way to watch your account slowly go down, 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 10, 12, 15, 20 bucks at a time. And why? It's because you're not going to make money with this strategy unless the market moves. Let me show you why. Okay, so let's just see here. Where did we, okay, so this spread is from 1200 to 1300. Okay, where did you buy in at? 12, where can we buy it right now? 1206. Okay, this one that we sold, where can we sell it at? 1195, right? So we can sell at 1195, which is right here. Okay. And the other one right now, we can buy it at 1206. So we'd buy it right here at 1206. Whoops. Sorry about that. So give me a second here, because you really need, this is the biggest mistake you'll ever make with this trade. Okay. So you're like, oh, I only got to put up $6 risk here and $6 risk here. I'll just slap this every time. Okay, but look at where you're selling and where you're buying compared to where the market is right now. So if the market just tweeted in between 1205 and 1196, just tweeted there, you're just going to lose money, right? The 6 and 6 you put up at 9 o'clock and expires, you just threw away 12 bucks, right? Or what if the market does move up? Okay, the market's right here right now at 1201. What if the market does move up to 1206? Have you made any money? Not yet, because 1206 is where you bought in at. So once you get 1206, then you're kind of at break-even point on that spread. So the market's right here, 1201. It moves all the way up to 1206. Then it keeps going another 6 ticks and moves up to 1212. Are you making money now? Well, yeah, from here to here you made $6. But you had to put up $6 down here, didn't you? So even if the market moves from right here where it is all the way up to here, you're just break even. You haven't made anything yet. Does that make sense? So this is not a trade you just want to throw on randomly every time you throw on a trade. Do you understand now why I said, hey, this is a trade that you will utilize when there's a big move expected? Because just a market tweeting around in here, you're going to lose both sides. Even if the market going from here up to here, you're just break even. You haven't made anything just yet. Okay? So, but if the market is going to shoot up 60, 70 pips, sweet, great, got it. But I don't want to just be throwing this on randomly. Okay? I want to only be utilizing this trade when there's going to be big moves. Okay? David says, how would you do that ticket to straddle the price? I understand what you're showing, but I don't know how to make the trade. Well, these are two separate spreads, David, okay? These are two separate spreads. I'm not quite sure your question here. All right, this spread here is a spread that's going from 1200. 1200 is the top right here. 1200 is the top, going down 100 to 1100. We're selling that spread, right? So I would just go in and sell that spread. I'm selling this bottom spread. Okay, so I sold that one. Okay, this spread up here is the one that has a bottom of 1200 going up 100 pips, which is this spread. Has a bottom of 1200 going up 100 pips. I want to buy that one. So I'm going to buy that one. Okay, so I have a spread that I bought +1 and a spread that I sold -1. Okay, does that make sense? So I bought, there are two different spreads. I bought one and sold one. Rudolph, are spreads better to sell? Well, I mean, if the market's going down, then yeah, you want to sell. If the market's going up, you want to buy. I'm not quite sure what you mean by that. Okay. Let me just look here. I'm got a lot of questions coming in from you on this. I'm making sure I got them all, or I've explained it all since then. Any other questions in general on this trade, this straddle trade? Does it make sense to you now? Because like 6 or 7 of you said, oh, I'll just do this all the time. That's awesome. Hey, it's an awesome trade. It's a very low risk trade and it's super easy, but it's not a trade to just go on and always do. You only want to do that type of trade when there's a big move expected. And I think you can see why now. Okay. Let's see here. Got that answered. Leonard says, are we always looking for a 2-hour spread? Not necessarily. It always depends on what the actual news event is. Okay. Sometimes certain news events that come out, they're just real quick and then they're over. And normally in those situations, we are looking at the 2-hour spreads. You know, sometimes the news events can have an effect on the market longer. And again, if you look at the news trading plan, you know, we show you what we're going to do. Okay. And, you know, we always have it on there and we'll always say, like right here on the straddle, we're looking to enter as early as 11 p.m. with an expiration for 7 a.m. So that's a longer term spread there, because I can have this particular announcement have a longer term overnight effect on the market. You know, or sometimes, you know, it'll just say, yeah, we're looking to get in at 9 and be out by 11. Okay. So let's see here. Yep. Yes, Leonard, these can also be done on the U.S. indices, Forex, commodities. This could be done on anything. Okay. Let's see here. Yeah, Richard, this can be used on natural gas reports, oil inventory reports, and so on. Okay. Michael, how would you tell when you're at break even? Pretty easy, Michael. Basically, if you know what you had to put up for each one of these trades, okay, like if I'm gonna, you know, if I wanted to buy this one, I've got to put up $6. All right. If I'm going to sell this one, I'm going to have to put up $5. So I had to put up $11 to place that trade of risk. Well, I've got my two positions open here. If the market starts moving, whether it's up or down, and I see my P&L go up $11, say plus 11, then I know I'm at break even. So any amount past that is profit. So if I know what I had to put up to get into both of them, I know what my risk was going in. As soon as one of these numbers matches that risk in a positive direction, I'm break even. And then anything from there on up is profit. You know, like if we were looking at that on the chart, if I knew I had, you know, $6 risk here and $6 risk here, well, as soon as I got up here plus 6 plus the 6, you know, then I can start making that there. Okay. So yeah, we're not talking about fees. Everybody knows fees. We're talking about tick for tick. We're not getting technical. So yes, I mean, you do have to include fees and all that. Yes. Okay. But when you're looking at tick for tick, yes, no one's ignoring fees. Everybody knows about fees. Okay. So, all right. Does that make sense? How to place that trade, how that trade works, and that it's a very low risk trade with a very high potential return, but it's only something you want to do when you expect the market to move. Okay, I'm going to say it one more time. I'm repeating myself because every time I've taught this in the past, people get excited. They love it. They see, I mean, you got to admit, this trade is stupid easy, right? It's like, oh, I find one close to the ceiling, one close to the floor. I throw $6, $6. I just go. Like, it's super easy. And it's super cheap. You know what I mean? Like, oh, 6 and 6, love it. Okay? But where you'll misuse this is you think I'm just going to throw these on all day long. Okay? And what'll happen is you'll just be wasting $12, $12, $12, $12 all day long, or whatever it may be, 10, 15, 20, because this strategy is only meant for big moves of the market. Okay, so that's what we call a straddle. We are straddling the market. Okay, now let me do something real quick here. I'm going to remove all these drawings. So that's how we take advantage of those trades there. All right, and like I said, you can see like there's one right there on our news calendar. Okay, so I'm going to, let's see here. Clifton, Joe, you guys are asking about charts. You can get some information about that as far as how to access those right here under Start Elite Education. Those candles, what I'm showing here, this is what's called a 6-tick chart. These are not time-based chart. This is not like 1 minute or 10 minute or whatever. These are tick-based charts, 6 ticks. So each one of these bars is 6 ticks. All right, I'm looking at the actual movement of the market, not just the movement of time. Okay. Let's see here, Rudolph. You'd straddle it the same way. I mean, whether it's NFP or FOMC. I mean, that's how the straddles work there. Okay, it's finding those close to the floor and ceiling ones. I'm not quite sure what your question there is. Now, Ron, I have no idea. Nadex has not told us either. Not sure on that one. So, okay, I'm going to move on here since we're already kind of an hour in. And like I said, we'll talk about binaries another time, about how to use binaries to trade news events. Tonight we're talking about spreads. Okay. All right, so that is how we do straddles. I just showed you an example of that, getting one right in the middle there. Okay, now we just talked about these big news events, all right, where it moves the market a ton. Most news events, though, more often than not, most news events do not have that huge impact on the market. They'll have a smaller impact on the market. Straddles are great and they're easy, but they must have the right move. Like I said, don't get caught up in just the fact that they're low risk. You have to make sure there's a big move in the market. Don't just randomly do them. Okay, a lot of news events will have a smaller impact on the market, and they're what we would call a range-bound trade. It's not something that's going to shoot up 100 pips. It's going to kind of stay in a range. It's going to kind of just pop up a little, and then maybe it'll pop back down and retrace. With certain news events, we're not, historically, they don't have that huge impact. We're not looking for a huge move. We're actually kind of figuring that the market will kind of stay flat or stay range bound. So, okay, if I've got a news event coming out and I don't know which way it's going to go, I don't expect it to really move much. So how can I possibly make money when I don't really expect much of a move? And then I don't even know which way it is going to move, but I don't expect much of a move. So how could I possibly make money on that? Well, if we don't expect it to move much, we don't want to do the straddle, right? Because the straddle, we need a move. Well, in that situation, what we want to do is how do we take advantage of range-bound trading and we collect premium, all right? And we do that with what we call iron condors on Nadex spreads. Now, I'm going to kind of put a disclaimer right here. The biggest mistake, okay, pay very close attention here and hold on to your questions, because what I'm about to show you right here is going to look extremely similar to the straddle I just showed you, because we are doing two different spreads and we are buying and selling different spreads just like we did before, but we're going the complete opposite way here. We're doing the exact opposite of what we just did. All right, so pay close attention here, because with the other example, we bought that upper spread, right? Well, here we're going to sell the upper one and buy the lower one. We're doing the complete opposite, but with a different type of spread. So pay close attention here, and we're going to walk through it to make sure you can understand the differences. So real quick, on a spread, again, if you're not familiar with the basics of a spread, I showed you where you can catch up and get some good information there. But on a spread, you can close it out early, or you can hold it until expiration, right? If you held a spread until expiration, if I held one till expiration, my profit or loss is going to be the difference of where I got into that spread compared to where it expired, correct? Everybody understand that? Everybody follow me there? For example, let's say I bought into a spread at 100, just as an example. I bought in a spread at 100, and I held it to expiration, and it expires at 120. So I buy at 100, expires at 120. Did I make money or lose money there? Just general question. Yeah, if I bought in at 100 and it expires at 120, I get what? $1 per pip, right? So I made 20 bucks. Okay? If I buy a spread at 100 and I hold it to expiration and it expires at 80, did I make or lose money? Right. I lost 20. Okay? All right, so just making sure everybody's awake here. Okay. Follow me real quick here. So, in last week or 2 weeks ago, we talked a lot about premium. What is premium? What does that mean, I have a premium in a spread? Well, again, you can catch up on that if you check out the step-by-step course or the webinar from a couple weeks ago. We don't really have time to get into premium tonight, but you don't always buy or sell a spread exactly where the market is. Like as an example, remember I just showed you here. Look at these spreads right here, for example. Where is the indicative? It's at 1194. But I can buy this one for 1205, 1197, 1194. There's different pricing, right? Sometimes I can buy right where the market is, I can buy below where the market is, or I can buy above where the market is. All right, spreads are priced differently. It's premium. Look at these dailies. Where's the market? 1195. Well, this one I can buy at 1219. That's way above. That's way higher than where the market is. This one, 1198, that's pretty close to the market. 97, that's pretty close to the market. What is this one? 1179. I can buy it at 1179, but the market's at 1197. All right, everybody understand that? You've got to understand, we talked a lot about that of be aware of where you're buying and selling. Not just be aware of where is the market at when you buy or sell, but where did you buy into the spread at? Okay, so notice that. You see what I mean? There's quite a bit of differences here. 1180 up to 1220, that's 40 pips difference in pricing on the spreads. If you need clarification on that, again, go through the step-by-step course or watch the video from 2 weeks ago where we talked about picking the right spread. That will make sense to you what that is. So there's premium into these spreads. Now, you can get a spread with positive premium or negative premium. You can pay premium or you can collect premium. Depends on what your strategy or system is there as to why you'd want to do one over the other. So pay close attention here to this. Hang on to your questions, and this will make sense to you. So as an example, let's say that there's a spread that the spread goes from 600 to 700. So the bottom or the floor is 600. The top or the ceiling is 700, right? So I got a spread that goes from 600 to 700. Right now, the market is at 700. But I can buy the spread for 680. So I'm buying lower than where the market even is. Okay? If the market does not move at all. It just flatlines and stays right where it is, dead. And my spread expires, and it expires with the market being at 700. Did I lose money or make money? Right, I made 20 bucks, right? Because the market is at 7, but I'm able to go in and find one that I can buy for 680. And then the market does absolutely nothing. It doesn't even move. Just time goes by. Well, I bought it at 680. It expires at 700. I made 20 bucks. Right? Quick example here. Follow through with me. Where's the market at right now? 1196. Where can I buy this spread at? 1179. So there's like 18 pips of premium in there, positive premium, right? Meaning I could buy this spread right now, and don't just go buy this. I'm not telling you to buy it. I'm showing you an example. If I bought this spread, because this doesn't even expire for 18 hours, right? I'm just showing you. If I bought this right now, I can buy it for 1179, but the market's at 1197. So I'm going into this spread with 18 pips of positive premium in my favor already. Does that make sense? That's just an example to you there of what I mean by buying below the market. Okay? Now, what is negative premium? Well, if I bought this one for $12.20, where's the market here? It's $11.96. I'm buying above the market, right? So that's the difference of, are you going to get this one and pay premium, or are you going to get this one and collect premium? Okay? So, all right, so everybody understands that. I buy at 680. It expires at 7. I make 20 bucks just with time going by. The market doesn't even have to move a tick. When we think about Nadex spreads, what do we think? We think $1 per tick, right? We think we need the market to move so I can make $1 per tick. But with premium, you don't have to have movement. You just have to have time to expiration and buy below the market. So, in this example here, the spread was 600 to 700. What about this example? Here's a spread that is 700 to 800. And the same thing, the market is at 700. But I'm looking to sell this spread, and I can sell this spread at 720. So I can sell it higher than the market, right? Because the market is at 700, but I can sell up here at 720. And when I sell, what am I saying? I'm saying the market will be below this, or go below this, or stay below this. So again, I sell this one at 720. Same thing happens. Time goes by. The market went flat. Market didn't do anything. It expired at 700. What is my profit or loss? Right. Same there. Same as example 4. 20 bucks. Because I sold it at 720. Time went by. The market expired at 700. So I made that difference. Okay. Does that make sense? So, what's an example of that? Well, let's go to the Nadex platform. Let's see. What is the market at? 1197. Where can I sell this at right now? 1217. About 20 pips higher, right? So that's an example of what I'm showing you here. I can sell this spread 20 pips higher than where the market is now. I can buy this spread 20 pips lower than where the market is now, right? Everybody see that? Like, you see, I'm not just making this up, like you can see that, right? let's look at, somebody asked earlier about indices, right? Okay, and these are just examples here. Don't be hopping in and taking these trades because there's not news coming out. But here's tomorrow on the Dow. Let's see here. Is there any here? 457. Okay, where's the market at here? 457. Where can I buy this one at? 380. Right? I can buy lower than where the market is right now. Again, market's at 457. I can sell right now at 477. I can sell higher than where the market is. Okay? See that? So there's a couple examples there for you. So I just showed you an example. If I bought one $20 below where the market was, and I sold one $20 above where the market was, and if the market expired in the middle, I would make money on both sides, right? So it looks like the same thing we did before, where we're buying one and selling one, but we're doing the opposite here. Okay, so remember the example. This upper spread was from 700. 700 was the bottom. 700 was the floor. So this spread is from 700 up to 800. This spread here was from 600 up to 700, or 700 down to 600, however you want to say it. And the market's right here in the middle at 700. So if I sell right here, this spread, and I buy right here, this spread, and the market expires right in the middle, I make this 20 and I make this 20, right? Or what happens if the market doesn't stay right here? What if the market goes up? It's at 700 right now. What if the market goes up to 720 and expires right there? Did I make money down here? Because I bought at 680. It expired up here. So I make the $20 on this bought one, don't I? Right? Because no, on this bought one down here, I made $20, right? Because I bought it at 680. It hit the ceiling and it expired at, so I got from 680 to 700, right? So I got $20 on the bought spread, correct? Yes. On the sold spread, I sold it at 720. It expired at 720. So I broke even on that spread. So overall, I still made 20 bucks. Correct? Okay. What if the market went up? Because ultimately, what am I wanting to happen here? If I'm selling here and buying here, I'm ultimately wanting it to stay right in the middle and not move much at all. Or it can move up, move down, and expire right in the middle, right? What I'm ultimately hoping for is to stay range bound and expire right in the middle so that I make money on both sides. Do you see the difference of this strategy compared to the other strategy I showed you a minute ago, the straddle? Because the straddle, we wanted it to move like crazy one way or the other, right? We wanted a big move. With this particular one, we're not, with Iron Condor, this is for the news events where, it comes out, it has a little bit of shift in the market, or the market will come up, then it'll retrace down, and it kind of expires around the same. It stays in a range. Well, a lot of people say, well, if the market's not moving, it stays in a range, I don't know how to make money. Well, you're not looking for directional money to make, you're looking to collect premium. So ultimately, we're wanting the market to stay as close to the middle as possible. But what's nice about this trade also, okay, is if the market does pop up to right here, we're still break even. We're still break even on this sold one. And we still made money here at 680. We made 20 bucks here, we're break even here. What if the market went up to 740 and expired there? Do we make money or lose money, or are we break even on the whole trade? We break even, right? Because we sold at 720, the market comes up to 720, and then it comes up to 740. So we're actually losing $20 on this sold side. But we made 20 bucks on this side, so we are break even. Now, if the market stays right in the middle, we could make 40 bucks, right? Make 20 on each side. So we're risking 40 bucks. Something we talk about quite a bit is a 1-to-1 risk-reward ratio, right? What does that mean? That means if I'm going to risk 40, I want to be able to make 40, right? So, looking at this trade, what does it take to get to a 1-to-1 risk-reward ratio? Meaning, if we sell here and buy here and it stays in the middle, we make 40 bucks. What has to happen for us to lose 40 bucks? Where does the market have to go to? Well, we know if it goes here, we're break even here, we made 20 here. If it goes to 740, then we lost 40 on this side, or I'm sorry, we lost 20 on this side but made 20 here, so we're break even. It's got to go another 40 ticks, 40 pips for us to lose the same that we had to potentially risk. Which means what? We were wrong, the news was wrong, history was wrong, everything was wrong. Instead of the market being range bound, it moved from 700 all the way up to 780. Like it went up a lot, right? Meaning, hey, something happened and we were wrong. Like it had to go from, you know, we thought it would be here, but it went, like 80 pips is not, you can't even see 80 pips on this chart. 80 pips is way down here still. Like it had to make a huge dive down or a huge up. 80 pips for you to still be at 1-to-1 risk-reward ratio and lose 40 bucks. Okay, so with these iron condors, these we're looking to trade when we're not expecting a big move, or when we're expecting it to maybe pop up 20 or 30 pips and then retrace down back into here. But anywhere in here between these two, we can still make money. Even going above here, we can still make money. Okay, and we have a huge range for the market to go against us, for us to still be profitable and for us to still be within a 1-to-1 risk-reward ratio. Does everybody understand this trade? Any questions here or any questions on this one compared to the straddle? Christopher says, so do you time this before the news breaks? Yes, absolutely. Because if you get into this trade after the news starts to move, it's too late. This is a trade you get into before news. And we normally try to get into it a decent amount of time before news. And once again, I mean, just go to the calendar and you'll see like, what is it, Wednesday? Right here. There's one on Wednesday. We're looking to find an iron condor on the euro dollar entering as early as 7 a.m. with an expiration of 9 a.m. for a minimum profit of 30. What does that mean? Well, we don't know what the profit's going to end up being, do we? No. But we know setting up what the potential profit could be. Now, is there always one of these trades? No. Is there always the perfect premium in there for every single news event that comes out. No, that's why when we look to trade it, we have certain, based on the movement of the market, historically we know, hey, we want to enter an iron condor. We want to only take that iron condor trade if it's there, if the premium's there, to at least have a potential profit of 30, or maybe on this one it's 40 or whatever. Okay, but it's all right there. Okay. Leonard, every single instrument is different as far as ticks. All right, and it's different at night compared to daytime when things are moving. I just happen to have that one on 6 as an example. Okay. Let's see here. Yeah, Rudolph, absolutely. The news could go either way. But again, since it's not a news event that has a big expected move, because if a news event had a big expected move, we're not going to do this trade. We're going to do the straddle, right, to take advantage of that big move. But with the iron condor trade, we're expecting a smaller move, or usually what we're expecting is not just a smaller move, but a lot of times with these smaller news announcements, what'll happen is it'll move and then retrace back down. So it'll pop up and then it'll come back down and expire in the middle. Okay. Let's see here. Yeah, okay, if you're using so how do you easily find these? What are you looking for on the scanner? Christopher, I think that's your question, right? Where did my scanner go? Here we go. So how am I easily going to find these? Well, we can go through and filter them, but they're real easy to spot even without it, Christopher, because, for example, and let me just switch over to euro dollar because that's what we were looking at on the chart. Okay, check this out. Remember we talked about how easy the scanner is. All of the spreads are right here. Floor and ceiling, shows the expiration times. You don't have to flip back and forth between a million pages. Shows you what you can buy it for and what you can sell it for, right? Also over here on the buy side and over here on the sell side, the red is the risk amount margin you got to put up. The green is the potential reward, right? Well, I don't want to do the math and do all that. You don't have to. Look at this right here, Chris. Premium on the buy side, premium sell side. So with iron condors, what are we knowing that we want? Well, first of all, we want two spreads that have the same floor ceiling, right? Does that make sense? Okay, so, all right, I want to do an iron condor. So I need a spread that has what? Positive premium on the buy side, right, Chris? So buy side, boom, all right, I got 18 bucks on that one, right? And I want positive premium on the sell side, right? Okay, cool. So then I look at the two. This one is 950 to 1200, got positive premium on it. This one here that I got positive premium is what? 1200 to 1450. So yes, I've got the same floor and ceiling. Boom, there's my iron condor. I don't have to go through, all right, let's pull up the euro dollar and let's go through all three of these spreads, and all right, this one's priced at 11.97, so I want something that's cheaper than that. No, how about this one? All right, 11.97, 11.99. Well, I can sell it for less here, but what is the math? Forget all that. All I gotta do is look and say, boom, do I have any positive premium? Boom, yes, on the buy side. Do I have positive premium on the sell side? Boom, yes. Is there a matching floor, ceiling? There it is. That makes sense? Does it meet the right time frame I need? do the two premiums together add up to the minimum amount that's, you know, on the trade plan? Got it. Does that make sense? Yes, it needs to be on the same expiration time. Absolutely. Yes. Yeah. You need to make sure you've got the same expiration time. Well, the iron condor is a buy on one spread and a sell on another spread, Rudolph. It's always, iron condor is always a buy and a sell. Okay? But it's not directional. If you think the market's going up and you want to trade the market up, there's no reason to sell a different spread. Like this trade here specifically to place, both of these trades we talked about tonight are specifically to place these trades ahead of the news, before the news comes out, because we specifically have no idea which way it's going to go up or down. Okay? All right. Fernando, no. Proximity, no. We're just, for iron condors, we're not looking for proximity. We're looking for premium. So no, don't have to worry about that there. Can you use iron condors in a ranging market without news events? Yes, Michael, absolutely. You can use iron condors in range-bound markets without news events. You may not always find, when news events are coming out, you'll normally see a little bit more premium built into the spreads to make them, you know, more, or to potentially have a better iron condor there. When it's just a normal flat day and there's not news events coming out, so there's not an expected move, therefore there's not a lot of IV, there may not be as much premium in there. But yeah, if you can find the spreads with premium in there, yeah, you don't have to wait on news. You can do iron condors anytime as long as they're there. Okay. Yeah, Leonard, I hardly ever use time-based charts. I always use tick-based charts. So I want to see what's actually going on with the market. Just because the Earth rotated on its axis by a degree or two, or because my watch, you know, my clock turned, I don't want another bar on my chart just because the Earth rotated or my clock turned, because that can give me a misconception of the market moving when new bars are plotted when it's really not moving. Does that make sense? So that's just my personal preference there. Yeah, and some of you are saying, hey, I think I got this, but I'm a little confused. Yep, you can rewatch this webinar here, or I'll show you another step-by-step kind of iron condor video that you can go watch as well. Yep, choppy markets as well, Mike. Yeah, yeah, because those choppy markets are normally range bound. So yeah, NFP, I'm normally, Rudolph, going to probably do the straddles just because I'm expecting such a big move. Okay. Clifton, your example iron condor spread has a huge margin versus profit spread. Yeah, you're going to put up more to get in the trade, but it's just margin. All right, your risk reward and your stops have nothing to do with your margin, because you know, all right, once I get to here, I'm break even at 740. Once I get to here, I'm 1-to-1 and I'm lost and I need to get out. Doesn't matter what I put up on margin. I know that here's where I'm going to get out, or, you know, in this case here, it'd be down to, what, 620 I'm going to get out. So yeah, I had to put up more in margin for an iron condor trade, but my risk reward ratio is 1-to-1, so I know exactly where my stops are. I know ahead of time exactly where I'm going to get out of a trade. Okay. Let's see here. Leonard, you could, I know people that use them. They're not that accurate in my opinion. That's why I use these diagnostic bars. Can you hedge iron condor or 2G binary? Yeah, Abdul, there are some advanced strategies of hedging some iron condors with some binaries. I can show you where you can get more information on that. All right, if we hop on over to the Apex website here, okay, I'm going to show you something. Right here on the news plan page itself, if you just scroll down, check out the first two videos right here. How to trade news events, and then what? Step-by-step iron condors on Nadex spreads. Walks you through them step by step in more detail than what we even went through in here. Even shows you how to use a special iron condor calculator that we have to help you figure out your risk and reward and where you would get out, and everything's right there on that page for you, free to use. This is literally a free strategy and system I just taught you. You don't have to pay anything for it. You can go in and see the news events there. You can use the spread scanner for free. You understand which ones to buy and sell, where to get out. It's a great strategy to use there. Okay, and we talk about some of that more in depth there as well. Okay, some of you are asking, hey, I'm not sure about this on spreads, or what is premium, and what is your risk reward, and what is premium and proximity. If you are on the Apex site here, go to Start Elite Education, go to Nadex Spreads. Right here, Nadex Spreads 101. This is a step-by-step training course. You can go through it. It'll talk to you about spreads, show you some live trades, walk through the basics of spreads, risk reward, then right here. What is proximity? 16-minute video, fully explain it to you with examples. Next one, what is premium? Once you go through this course right here, you will understand spreads, know exactly what they are, and exactly how to trade them. If you're looking for actual strategies and systems to trade them, well, it's the next thing down under Spreads 101. Some of the different systems. If you go right here to Advanced, Iron Condors, I just showed you. Straddles, I just showed you. You can watch those there again as well, or rewatch this video also. Okay, so all right guys, I know we went a little bit over here. I appreciate everybody staying on a little bit later, but I hope that helped you there to give you a few ideas of not only how to trade news events, but maybe a few ideas as well as how to trade volatile markets or how to trade range-bound markets, and just a little better understanding of how some spreads work. But I will have this webinar uploaded here in just a little bit. Like I said, once again, where will the webinar be? Right here under the Help Desk and Forum, go to Trading Questions Forum and scroll down to the bottom area here where it says Watch Webinars Here, and I'll have it posted right here under Newest Webinars. So again, guys, take advantage of the free tools that are available to you. Hop on Nadex.com, get yourself a free Nadex demo account with $25,000 of demo money. Great place to try out some of these new strategies and systems, play with them, test them out in demo. Don't be using your live money until you've tested these out and you've got a good handle on them. So take advantage of that. Hop on over to apexinvesting.com, get a free username and password. Take advantage of all the free step-by-step education and training courses. The scanners, like I showed you, the scanners are just awesome. The news trading plan, all that stuff is just right there for you. Okay, so take advantage of that. Once again, we do these webinars every Monday night at 7 p.m. Eastern Time. So thank you for being with us tonight. Hope to see you next week and every Monday at 7 p.m. Eastern. Have a great time and great evening. Yes, thank you very much, guys. You're very welcome. I appreciate all the compliments. I hope it helped. If you have any questions at all, feel free to hit us up over on the Apex website. You can ask questions in the forum. You can hit us right here under the help desk. You can submit a help desk ticket. We'll get you directed to the right place, answer your question, get you directed to the right video, webinar, training course, whatever it may be that we can help you. We're here to help. And again, keep in mind, guys, all that education, all those free tools, all that's free to use. Hop on and use it. All right, guys, you're very welcome. Thank you so much. Have a good evening. We'll see you next Monday.